Good morning, welcome to this update on Friday the 19th of May presented by Tom Colley. We've had a week that has really just shown us just how much uncertainty there is in the markets at the moment, how much uncertainty there is economically on a worldwide scale. We've had the politics of the US very much dominating what's been happening, and movements in the markets that because of that are very unpredictable. We'll have a look at the charts in particular and what I'm specifically talking about in a moment. In the first instance, let's just have a look at the news, see what we've got ahead of us today and what we saw yesterday. Yesterday we saw strong employment and unemployment data on the Aussie. That has been a continuing picture for the Australian economy. If you look at the history of the last 6 months, almost every data point has been positive. They're also seeing a somewhat overheating in the housing market, which causes them concern because that is alongside disappointing growth, disappointing inflation. So they seem to have two contravening factors within that economy at the moment, and have stated that they don't want to see the Aussie certainly any higher, if as high as it is at the moment. We also had some very strong retail sales out of the pound, reversing what we'd seen on the previous month figures when we'd had a reduction of 1.4%. We saw an increase of 2.3%. So you could describe that as a recovery in retail sales in the UK. That gave the pound a boost early in the day. It held some levels and came back to retest the top of a box range, and that's one of the reasons that what I mentioned earlier, we saw what has been described by some of the FX press as a mini flash crash. But probably is just more a indication of how much uncertainty, how much volatility there is in the market at the moment. We'll have a look at that when we get to that specific chart. The other thing we had was unemployment claims out of the States. That's the weekly one. It doesn't have the same impact by any means to the non-farm payroll, etc., that comes the first week of the month. Looking forward to today, we only have CPI and core retail sales for the Canadian dollar. CAD's had a very mixed, volatile week. I don't think there'll be too many people trading that, but obviously you need to be aware of these if you are. Okay, let's have a look at the charts and let's have a look at the week in general. Well, what we've seen clearly is in the first half of the week, we've seen a big sell-off in the dollar. It broke previous lows for the year and has pushed on back down to the downside. This means that technically our dollar strength bias is no longer valid. The cause or the reason for that dollar strength bias still exists because the US economy is the only market where the central bank are looking and actively talking about raising rates. They were very bullish, very hawkish about the rate rises following the last FOMC meeting. All the speeches that came out after that were talking about the fear of getting behind the curve on rate rises, and that still all exists, and that is completely the opposite to the other major markets, the euro for instance, where they're refusing to talk about anything other than ongoing support for their economies. So in a long-term picture, we still have a favour of dollar bias, but technically at the moment, having broken the yearly lows, we're now below the election night. This is the Trump election night. We've broken the high, which was the previous yearly low. We've broken the open, and you know, this low here was before it became apparent Trump might win, which was really reflecting an expected Hillary Clinton victory before price took off to the other side. So some significant levels broken. We broke this downward trend, this upward trend line a long time ago. We came through and we retested that perfectly in there. I've got a falling wedge drawn in there. It's not technically yet confirmed because we haven't got 3 touches. However, this bottom of that is actually also the bottom of a channel you can draw between those 3 highs there. So it's potentially significant, but I can't identify a significant level through there. I think that the dollar on this chart has the possibility of dropping to 96, 96.50 zone down here. We've got a commitment of traders extreme, or we had one last week. We'll be looking to see what happens to this week, but that would have been at this level through here at 98. I'd be looking for that to hold in that sort of level. It didn't, so now it becomes an ignored signal. If it's valid until we get the updated data. If the signal's still there, it becomes an alert or at the next significant horizontal level, which is in that 96, 96.50 zone there. Over on the yen, well, this was a market that didn't behave as it was expected. It didn't respect its technical levels. Earlier in the week, we had a channel coming through these highs here, down through all these lows here. Lovely channel. Price had broken through, closed above significantly, and we were looking for a pullback into a level through these lows here. We didn't see that. Price just came steaming through as the dollar fell dramatically based on political events in the US, specifically around Trump's election campaign's relationship with Russia and his subsequent sacking and what he may have asked of that sacked FBI director. So that was what drove that. There's a lot of political goings on there which are distracting attention from economic matters in the States. Also, Trump is struggling to get through his legislation, and the markets are much more pessimistic about his ability to keep the promises he made in his election campaign than they were at the end of last year. As you can see, we've pretty clearly seen a downward move, which is on this chart dollar weakness. Over on the euro, well, pretty similar. We were watching a level through here just below this current level here. It was a clear level. We were expecting price to respect that level. We shorted that market. In this instance, unlike the yen, the market did attempt to hold that level for much of a day, and then overnight it closed out by hitting our stops as it pushed higher. We now appear to have a channel through here, and going into next week have the potential to pull back to the bottom of this channel before going further to the long side on this daily chart. Now looking for next targets about 1.13. So what we're really saying is we're expecting the markets to make further highs here, further lows in the yen before we reach a significant support or level of support for the dollar. Over on the pound, well, this is where we saw a lot of volatility yesterday. We had that good data out in the morning, which was about retail sales. That pushed price well out of our box range here. We also could be seen as an ascending triangle here. So basically that's price compressing against this 129.90 level. And we were looking for a breakout. We got a breakout on the news, and then I certainly had an order at 29.90 looking for the classic retest of the top of that box range. Targets were only minimal. My target was within the spike there. That now clearly looks like a false break, but through the day it had held above that level all day. So certainly intraday it wasn't that. Price came back into that. We had a boost in dollar strength, as some news came to the market about the FBI director and Trump, which has subsequently been discredited. But basically what that meant is about 7 o'clock last night, price just rocketed back down and moved the thick end of 100 pips in 12 seconds to the downside. Why did it do that? Potentially there were a lot of trades through this level. It's a very clear and obvious strategy. Perhaps it was a stop hunt, in that somebody there realised that how many trades there would be there. One of the big players placed a big heavy trade that pushed it below there, took out all the stops and pushed the price further to the downside in order that they could be buying at a better price, for price to actually go where the expectation was. So volatility in the market, disappointing. It's been that way all week. It's been a very tough week to trade. It's been a very unusual week, but we have to draw strength from the fact that and be confident that the levels that we pick to trade are technically good levels, that the probability will play out over the course. And we've just had a week where we have been taking the losses ahead of the wins to come. Over on the Aussie, well, Aussie spiked up yesterday on that employment data. It then pulled back down. Aussie is one of the weakest of the majors. Even when the dollar has been extremely weak, it's failed this week to take any strong advantage of that. So it's what it's saying to us. It isn't as strong as the dollar. There was a trade there. There is a level through there. And I was talking to one of the Phoenix Blue clients last night that took that trade. There was money to be made there. Personally, I'm waiting for this next level where I've had an order all week from last week's analysis, weekend's analysis, which would be a pullback to the downward trend line at the top of this triangle here, in conjunction with significant tips and wicks through here. We have a range. It's a 40 pip stop. So in this instance, actually after this week, potentially slightly above the entry would be a better key definitive level. But with the markets being what they are, by having an order down at this level, we have a range in which we're looking for price to turn. That gives us some flexibility. So if price does come back through and hit through these lows here, say the close of this neckline for the double top there, then if price came back to that, well, that would still be within that 40 pip zone, and we would still be taking our trade to the downside there. Over on the Kiwi, well, it's been a very in fact, it's been a bullish week, but over the last few weeks, we're very, very contained within this range through here. A couple of weeks ago, we had a COT Extreme long alert. That subsequently disappeared. It'll be interesting to see whether that reappears this weekend, and it's just a fact that there was a timing thing, that when the data was actually taken, price had moved away. We would expect, bear in mind what's happened in the meantime, that this new low here fell into the window of the new data, so we could quite rightly expect a COT Extreme signal there again at the weekend. This order in here was an intraday trade yesterday that got spiked in at the same time for me, at the same time as the pound trade had that really strong, very short-term movement, triggered me into this trade. My rules have a strict time frame that intraday orders stay on my charts. So despite what happened last night, I wouldn't have taken that trade off because it would have broken my rules. I have, however, price on this one has moved back this morning to break even, and I got out of that trade at break even because I don't like the look of it, and break even for me is a good trade. It means that we've reassessed what's happened. Market hasn't done what we've done. We've allowed it to come back to the break-even point, or if it hasn't moved from the break-even point, We assess our trade at the end of the day and decide, right, if it's not doing what we, or the market isn't doing what we were anticipating it would do, is this the time to get out? And in this instance, that was one of those times. Another market of interest this week has been gold. We've been very bullish of late. We then had a big sell-off in gold, and we're now between these two key levels here. Again, a lot of uncertainty. With the opportunity here is potentially if we see a recovery, particularly in stock markets, because this has not been matching the stock markets particularly well in terms of risk on, risk off. Again, just suggesting more uncertainty. So we'll be looking for breaks of significant technical levels like this 1245 level through here, and retests of that to take it to the short side. Or wherever. You could also see that we're also within a triangle, which means that there is more and more indecision in this market, as there are in many other markets, and we're looking for some factor, whatever that might be, whether it may be June Fed rate hike or something else before that. Markets clearly need some more definitive direction, and as traders we could really do without so many political machinations which give us issues in terms of our levels holding. Okay guys, so that's another week. Go away at the weekend, have some time away from the charts, reassess them with some fresher eyes. Go into next week not looking to try and revenge losses that you may have taken in uncertain markets this week, but sticking to your rules, analysing well, and only taking high probability opportunities, and doing the key thing, which is protecting your capital. Have a great weekend, and we'll speak to you on Monday. Take care.